Hey guys, my name is Jim. I'm from AccurateForexTrader.com. I just want to run a system by you. I'm just basically looking for ideas from others. I've got a bit of a framework for a basic mechanical system which may have the possibility of turning into an EA later down the track, but I don't really know. But it's a system I used to trade before with a team of traders, and what we had a weekly target. It was 200 pips for the week, and once we achieved that 200 pips we stopped trading for the week. It was based on three pairs, the Euro, Great British Pound and the Swiss franc, and it was traded on the 1 hour charts. It was very hard work because you had to monitor the charts every hour at the top of each hour. So I've modified it a bit, gone out to the 4 hour charts, and this chart here we have the Great British Pound New Zealand dollar. I like these sort of high volatility pairs. This is one of my favourite, and I'm just going to give you a bit of an overview on what the system is. As you can see, there's no indicators on the chart at all. It's just a basic 4 hour candle chart, and I've got these lines up here. Right, I've got 4 yellow lines. The yellow lines are actually called my working lines. That's what I'll refer them to. I have a red line, that is my stop or stop and reverse, and I have a blue line, that is my point of entry, whether it to be a sell or a buy. So what I'll do is I'll just get it set up. I'll bring the crosshairs up. This point here, I'll just say that's my stop. I have to start somewhere, so I'm just trying to get a starting point, and I'll say my entry point was at that level. Alright, so we're selling here. So there's my risk between the blue line and the red line, which is about 150 points. That red line's a stop and reverse, so the price zooms straight up through that, and it would stop out the trade I'm in and open a trade in the long direction. Alright, now what we do is these 4 yellow lines. Once we get a point of entry, every candle, we're on the short side, every new low I put a yellow line at. Alright, so there's one, go down to the next one, there's another one. So we're just heading down. I've got 4 lines I want to get in play. They're my working lines. There's 3 and there's 4. Alright, now you can see here there's a new low, there's a new low, then there's a high, so we don't move the lines. Now here's a new low on this candle here, so all I do is take the top line and it sort of leapfrogs the other line, so it comes down. Alright, then we have a bit of a pullback up, then there's a new low in here. I just have to bring up my crosshairs because I don't know how Camtasia doesn't show the little cursor thing. So we have a new low here, so I'll take the top yellow line and bring it down. There's another low just to the right of that, you can't quite see it, so the top line comes down and goes down. Now all 4 lines are in play. Now what I'm looking for now is once price breaks out of those lines to the upside, then comes back into those 4 lines, that working area between the top yellow line and the bottom yellow line, that's the current working area. So see here, price has just popped out and came back in. So what I would do is I'd bring my stop and reverse across that high there. So that's now I've locked in 201 points or 201 pips profit approximately, give or take, spreading that. So from the blue line to the red line. So I've completely got rid of my risk, and that's how much I've locked in. Now we keep on going, price keeps on heading down. Then we get this reversal up through the red. So what happens now, it's, remember that red line's a stop and reverse, so now we're to the long side. So all I do is take the very bottom yellow line. This is where it gets a little bit confusing, so you just have to bear with me. Take the very bottom yellow line, because that's my most recent low, and put it to the top of the candle that broke through the red line, so this candle here. Now I take my red line, and that's my new stop and reverse to the downside, and that goes to where that yellow line was previously, so that's my low. And I'll take my blue line and put it to where the point of entry was, where the red line was previously. So just swap the lines around. So then we've got a new high just next to it, it goes up to there, and we can tell looking at it, it breaks down to the downside. So this yellow line's not in play yet, and that yellow line's not in play. So basically we've just got a stop and reverse, point of entry, and two yellow lines in play. Alright, now there's our risk between the red line and the blue line, so we've got approximately 54 pips risk there, and because that turns again, drops down, I take this top yellow line, put it down to the bottom of the candle that broke the red line, which is here. Now I take that red line and put it to where that yellow line just came from, and I take the blue line and take that down to my point of entry. So that yellow line's not in play yet either. So then we've got a new low, so I'll take one of these yellow lines down there. Now, there's nothing in there, there's no new lows, so we wait, there's the next new low, so I'll take one of these yellow lines down to there. So we've only got 3 yellow lines in play at the moment. There's another low there. Alright, now we've got all 4 yellow lines in play, so now we watch for price breaking through the upside. Another new low, so we leapfrog. Another new low. And see, price did break through on that candle, but we just ignore that. Another new low. Another new low, gets pretty tight in here. Another new low. And another new low. Alright. Now just bear with me here. I'll just might make it a little bit bigger so it's a bit easier to see. Yeah, that'd be right, it's gone. Alright, see how price has come down. We've got that bottom low. Then price has gone up, we've got that candle up, then it's come back in, so it's gone out, price has gone out, then came back in. Now I would be bringing my stop and reverse down to that high there. Now it locks in that small bit of profit there, and so what happens now, as you can see, bang, we go straight. So what we do is we take that bottom yellow, goes to there, so we're going to the upside now. We take the red, we put it at the bottom, and with our entry, there it is, we put it there. And we've got another new high, so we're long now. These 2 lines aren't in play yet, so they actually, you can keep them out the way if you want. I just leave them where they are. So price comes down, it comes close to the SAR, but doesn't, and then price goes back up again. So we've got a new high just here, just a fraction there, it's not much. We've got another new high here. Now see what happens here, it's gone high and price just drops out through the bottom of the yellow line there, then goes back up. So that for me is moving my SAR up, locks in profit, and we're off to the races again. So up we go, up we go, up we go. So you get the hang of it. This is a look, I've deliberately cherry picked a good example here with a nice downtrend, nice uptrend. You can understand that this would get messy in a sideways market. So all I'm doing is leapfrogging these yellow lines until they sort of they form a box from the top to the bottom one. We're long here. We can't lose because our stop and reverse is above our blue line. And we just continue up. Alright, we're getting 8.5 minutes on this video, so I'm going to just discuss a few other things. So here we go, we've gone up, and here we've got a drop down below, then it's gone back up. So there we go, lock in their profit there. Now what I'm thinking, I know I've used this before, but a slightly different version. I only used 3 lines. I was a bit more aggressive with regards to moving stops and that. But what I did find on the 4-hour charts was 200 pips seemed to be a nice target. Here you can easily see there's a entry point well past. Well, we've locked in 350 and it's still heading up for a high of about 600 pips there. What I was thinking, and I'm not sure whether this will work or not, but say for example you open a position size of 0.2 lots for example, and when it close half at plus 200 pips, and it put a hard stop in place at point of entry. So you're locked in 200 pips on half your position, and you can't do any worse than break even on the remaining half. That would probably take the stop and reverse out of play at times. However, you could still use the stop and reverse for an entry in the opposite direction. even though you might not have an open trade. Bit of stuffing around, I know, but I'll just make this chart smaller and we'll just wrap it up. I'll just go ahead a bit here and I'll just show. So it gets a bit messy in there, but you'll probably find that there's, like 360 pips, that move just there. There's 330 pips. You go even to the downside, 360. So there's plenty of decent moves. 314. That's what I'm saying about these 200, because you get stuck in these sideways. And what I was thinking about is combining a whole basket of pairs, because it's quite easy to monitor. This is on the 4-hour chart, so you only have to check it every 4 hours or even every 8 hours. And you could move the lines and adjust your trades. It takes 10 minutes probably if you trade multiple pairs. So I'll run it by you all, and I'll post this on one of my forums, and we'll see if I can get some feedback, and look forward to people's comments. Thank you.